Alright, I wanted to put this video up as a quick guide for certificates of deposits, commonly referred to as CDs. Now, they're basically some of the simplest, easiest investment things you can get involved with. Yes, investment things. You see, if you have a savings account, that's basically the same thing as a CD. The way it works is that a CD is a timed investment, and thus, since your money's kind of locked in the bank's hands, there's more risk involved that you're not going to get your money back, or when you need it to. Be put back into your hands. So therefore, there's a higher reward function. They're going to pay you more interest. It's kind of like you're giving the bank a loan. Now, CDs in the past used to be a pretty lucrative investment. You know, back in the 60s, people used to be able to make like 4 to 6% interest on CDs. Back in the late 70s, early 80s, especially during the savings and loans crisis, yeah, interest rates were up like 20%. People were making a lot of money. Nowadays, interest rates are virtually zero, many times below, 1%. And that's because the Federal Reserve keeps on printing money like it's going out of style. But regardless, some people still are interested in some small investments, so I'm putting this guide together. If you've never thought of anything, what exactly a CD is. Now, a certificate of deposit, they come in several terms, different lengths. Back in the past, there used to be short 30-day CDs and really long 10-year, one whole decade CDs. Nowadays, everything's usually within the 90-day and 5-year bubble. That's usually the period of time you can find. And once again, the longer you allow the bank to keep your money, the more percent of interest they're going to reward you with, the more money they're going to give back. You see here, like a CD, they usually mark the interest rate into two categories. You're going to have your real interest, and you're going to have then the APY, annual percentage yield. Now, that is a way in which that is the APY, is a way in which we can compare CDs of all different types, because some CDs compound their interest differently than others. What's interest? What's compounding? Well, if you don't know, when you put money in a savings account, you earn interest. And the way it works is that you can take a whole number, the principal, that's what it's called, multiply it by a certain decimal, which is just a way to express a percentage. And you multiply the big number by that smaller decimal figure, and you're going to get a number which can then be plopped back into the big number, the principal, and you have a whole new principal, and you can multiply that by the percentage function again. And the idea is that over time, of you constantly plugging more money into the money to be multiplied, you're going to make more money over the course of a year, if that made any sense. It's compounding interest rather than simple interest. And the way it works is that some CDs have more compounding periods than others. Some compound the money every month, just like a normal savings account. At the end of every month, they multiply your money by a certain factor and then add more money to your bank account. Yippee! All right, some of them on these CDs, particularly the online CDs, I'll go into detail, will actually compound your money daily. Yeah, literally, 365 times a year, you're going to get more money added to your account. That's not bad. Some of the past, you might see quarterly compounding, like about once every 4 months and stuff like that. The way to compare all these different types of CDs is to take the interest rate, which they actually use, and go through a certain mathematical equation to pull out the APY, which is a way that you can compare CDs that are compounded daily to ones which are compounded, even annually. And the idea is that the larger the APY, the more money they're giving you for the CD. Some CDs are pretty nifty because even though they might have fixed interest rates, the interest rate never changes over the life of the CD, they still allow you to bump it up. If interest rates in the economy are to go up, you can actually raise your interest rate on your CD to a more lucrative percentage yield. So therefore, you're making more money. Some let you do it once, some let you do it twice. Others are actually pretty neat. They actually have variable rates. Now, variable rate CDs are usually backed to something like a 2-year treasury bill. So when the interest rate goes up and risk-free rates go up, the money you make actually starts going up as well. The way it works, like I said, though, is that you want a CD that's going to pay you the highest amount of interest possible and also give you the shortest amount of time, theoretically, which money cannot be accessed. You see, the way it works is that if you need your money now and you already put it in a CD, you can still get it, but you have to pay a fine. What does that mean? That means that you're not going to get all your money back. That means that you're going to get a certain percentage back of the interest that the bank basically said you deserve. But usually they let you keep your principal, all the money you put in. If I put $500 in a CD, I tend to get all my $500 back, which is another topic. Minimum interest, minimum balances, excuse me, Some CDs let you open them up for only $100, believe it or not. Others you have to put $500 in. That's usually the standard. And some CDs, they let you dump in $1,000 as the minimum. And the way it works is some CDs even have maximums. You see, the best CDs are the ones which give you the farthest range possible. The ones that don't require you to put too much money in initially if you don't have a lot of disposable income. And at the same time, if you do have a lot of money, if suddenly you win the lottery and you want another investment, you can dump in $1 million. Most CDs only allow you to put in $250,000 at once because that's the most that they're basically going to assure you for. You see, the best interest rates are not going to be in your Chase, Bank of America bank accounts. You don't want to deal with those banks. Those banks are ridiculous. Go to your local banks, particularly savings and loans institutions, credit unions, because they make the majority of their money off of loans. If someone wants to buy a car, they give them a loan. If someone wants to buy a house, they give them a loan. And based off of the interest payments that person pays, they actually make money for themselves rather than investing in the securities market. So thus, since the majority of their income is going to be coming from you, the consumer, they're going to try to get you to give them money. Once again, another way to try to earn more interest is actually to engage in online banking. Now, this is going with the whole... Sorry about the delay there. We were talking about online banking and risk and reward. You see here, online banking institutions are going to be able to provide you with higher rate CDs due to the fact that they have lower expenses. They don't have to worry about employing as many people. They don't have as many concrete buildings to take care of. So therefore, they're going to give you a higher percent in interest. But there's more risk and reward at play here. Once again, because you can't go down the road to your local teller who knows you personally and just go pull your money out of the vault, you have a little bit more risk involved. The bank's thousands of miles away and everything's virtually an online transaction. No one knows you personally. You can't go and see the inner workings of the bank. So therefore, there's a little bit more risk involved. But you're going to get a little bit more reward with a higher interest rate and also a little bit more compounding periods usually. But yeah, that's the gist of what exactly a CD is. Now, CDs, I can't really give perfect investment advice, but like I said, go to local banks. Go to small credit unions rather than the big banks. You're going to get a lot more interest and a lot better deals and usually a lot more options too. You can practically customize whatever CD package you would like. Online banking still is a good option. If you have plenty of money and you don't care if you're going to lose it, you don't care if you don't see it for a while, good. Throw it in an online bank then. But there's a whole bunch of different ways for you to find these relatively low interest rate investments. The year is currently 2013, and obviously this video is going to become dated, but if people are interested in what type of interest rates are out there, I'll tell you right now, most small bank institutions, the most you're going to find is a 5-year CD with something ranging from 1 to about 1.25% APY interest. Online institutions, a little bit over 2% for a 5-year CD. And smaller CDs, let's just say something like a 90-day, you're probably going to find things maybe in ridiculously low as only 0.3% interest. So, yeah, that's the story. Take care.